perhaps a deal like this where it's pretty large. You wouldn't expect maybe to go up, like 50, 100% or something like that. But, really what this confirms is that SK Hynix has been able to achieve a premium to its, the price at which the stock trades in Korea, and that was part of this exercise here. It was this was a offering which was designed to fund the capital expenditure of the company, but it was also trying to do that in a way which was most efficient for the company and enabling the company to get a cost of capital that was more the lowest they could, and basically as good as Micron's getting in the US. So obviously it's an efficient way for the company to raise money in the US. This is the way they did it.
What has the company said about their need for additional capital going forward? Did they put out a message that we may come back for equity, we may access the U.S. debt markets? Did they say anything about that?
Yeah, I think if you see the interview with the chairman, he did say there was a possibility they could sell more ADRs, and obviously they're going to raise debt in the future as well. So I think the company is going to have significant capital expenditure needs, and this is the sort of interesting thing about the market at the moment, where there's a lot of interesting companies that do have heavy capital expenditure needs. And I think in the past we'd probably think they were not the best companies to invest in, but things are different these days. But obviously they're generating a huge amount of huge return on the assets they have at the moment. But I think the really interesting thing from that interview, I thought, with the chairman was that he has to balance off really maximising profit for the shareholders, but he's also got to supply his customers with the product, and obviously he has to expand the production of the memory chips, and doing this is something that could subtract a little bit away from shareholder returns over time, but that's a balancing act that management has to achieve, and that's really interesting challenge for the company looking forward here.
So the market where SK Hynix has its primary listing, Seoul, is the world's best performing stock market, right?
Yes.
I mean, it's done incredibly well, and this is even after it basically had this moment of whiplash the last couple of weeks. It's been very, very volatile. Just this week alone, I'm looking at it. The Kospi, the benchmark index, there closed down 5%. Last night, it rose 3%. So it's kind of all over the place. Is there a sense that this was kind of I don't want to say the top, but it was kind of a dicey time for SK Hynix to go public in the US, given that there's so much volatility in its home market? Yeah,
well, I think when the stock's up 600 or 700% in the last year, finding the right price here, it was always going to be a little bit challenging. And I think although the offering did price at a premium to the translated value of the stock in Korea, it did come back 25%, 30% ahead of this offering in the past few weeks. And that was something that I think the investors in the offering, the US investors that came in for the ADRs, were pleased about. I mean, obviously, it'd be much better to have bought the stock a year ago before it had gone up 600%. But the investment opportunity was laid out to them here, and the stock did come back ahead of the offering, and then it priced at a premium. And now it's trading up again. So the company's trying to get a multiple that's closer to Micron, which has been an outstanding stock in the US. And but whenever you see stock prices go up in a straight line like they have, or at least go up very, very sharply over a short period of time, there's always a chance for retracement. Right. But to your point, the Korean market has been hugely volatile. It's been very strong. Yes, one of the strongest market in the world, but it's very volatile. So I think the interesting thing for investors is whether this stock is going to be volatile now that it's trading in the US. Yes. And so is some of that volatility in Korea going to get imported into the US?
Very well said. Okay, you keep bringing up Micron, and that's because that's the US's biggest memory chip maker. But SK Hynix has a rival at home, and that's Samsung Electronics. Yeah. Does Samsung Electronics trade in any way in the US? And if not, would it consider listing in the US because SK Hynix has?
Well, I think people are expecting other companies to look at ADR programs. I mean, Kioxia of Japan.
Kyocera, right?
Yeah, I've got the name right there. I think ADR programs are not necessarily simple things for companies to roll out, and I think a lot of Asian companies have probably shied away them in recent years. Certainly Chinese companies have not really been encouraged to in either direction to do ADR programs. So this might be a little bit of a one-off and really reflective of these amazing conditions in the memory chip market. This has been a pretty orderly outcome so far.
Real quick, do we expect the stock to trade at a premium in the U.S. versus Korea from a valuation perspective?
Yeah, so I guess to Scarlett's point there, even though Samsung is a rival, the direct comp here was Micron, and Micron does trade at a premium to SK Hynix based on forward earnings. I mean, obviously you can value companies in different ways, but and part of the exercise here was to close that gap, at least as far as the stock trades in the US, and obviously when the company goes to look to raise further capital, it'll raise it in the cheapest way possible. And if the stock is trading at a premium in the US versus Korea, there's obviously going to be an incentive for them to raise the money in the US. And obviously the other thing about the US is there's a lot of money in the US as well. So.